Hello, ladies and gentlemen. My name is Greg McGlosky, and this is a Forex commentary for FXStreet. It's Wednesday, October 6th, 2010. I'm going to go through some of these major currency pairs, take a look at them as we enter the New York trading day here. We did have some data coming out of the U.S. in the form of ADP employment report that came out weaker than expected. They're expecting a plus 20,000-ish type number. It came in at minus 39,000. This number typically understates the private sector employment payroll that coming out on Friday when the U.S. Labor Department releases their number. The expectations for that number is supposed to be plus 75, but when you're expecting 20, it comes out minus 39, and we're expecting 75 for private payrolls. It's got the market a little bit worried, and we've seen a rebound off in the euro. Selling of the dollar continue, but we are running into the ceiling levels here at the 138.80 level. We for the euro versus US dollar, we also have support down at the 138.05. We did have some negative news come out of the eurozone with Ireland downgrading by Fitch, but that was largely expected it has been expected, I guess, in the market that possibly could happen. Now, from a technical basis, I have a couple trend lines coming in here. If you connect the Actually, if you connect, it all starts if you connect the lows going back to this date right here, September 14th. Put a parallel line. You can throw a line in the middle that really defines the bottom end of this channel that we've been in since the point of September 24th, and then connect the highs here, and we have a third channel guardrail, if you will. That level comes in around the 139. 10-ish 11 area up at the top side. You can see that in the chart right there. So we'll be watching that on any sort of break to the upside. We are back down to 48 now, right in the middle, and the support comes in. I'm going to zoom in here now and take a look at the most recent data. The support comes in against the high that we saw on the Sunday night's opening session. That level came in at 138.05, and then we had floor here on Monday, which came in at the 138.21 level, and then other lows right here. So this whole area in between 05 and 21 is going to be our key support. Off the Ireland news, we came down, went just a little bit below, but then bounced back up, so that the euro continues to have resilience to the upside. Taking a look at the 5-minute chart, very non-trendy type day here. If it wasn't for the Ireland news, we'd be in a 70 or so pip trading range here. The market is moved back toward the 100 and 200 bar moving average in the 5-minute chart. This suggests that we're still in a non-trending, and the failure to move much higher off the ADP report leads to some profit taking here in the euro. Get below the 100 and 200 bar moving average is going to be needed, however, in order to spur that on, and then getting through the 05 to 20 level here off the on the downside will be our next targets on the downside in order to push the market further in that direction. I'm going to put the Fibonacci back up to the top here, and we would next target the 38.2% retracement at the 87 level, and then down to the 50% retracement level down at the 58 level, which also corresponds with this low before we moved to the upside yesterday. So it was only yesterday we stayed at that level, or at that level, so we could see that euro move down in that direction. The sterling versus US dollar, very choppy, narrow trading range over the last 10 or so days. Maybe not so narrow. We got 156.68, 159.37, but most of the activity is in this meat and potatoes right in this middle section right here. That level is topped by the 158.72 to what is that, 65-ish type region. We are now moving back below that level, moving back toward the 100-hour moving average at 158.27.20 to 158.15. That's 200-hour. This is a 100-hour moving average. That those levels will be targets on the downside. If you were to look at lows here, this is kind of a key remembered line. What I like to call as is these lows right here at the 157.50 level to 157.70 level is going to be where we find support support in the if we get through the 100 and 200 hour moving average in the sterling versus US dollar. The Japanese yen continues its assault to the downside. We made new lows here, but then have since rebounded to the upside. So the lows took us down to 82.76, back above the 8300 toward the 8300 level. There's a trend line here that when we broke down to 87, we'll discount that, but one, two, three, four, five moved back up through the top side. Not to mention that the 87 to 95 level, that was our lows over the last few days here, and that's where we're going to find support now in the dollar versus yen. People are worried about any sort of intervention that may come out of them. Remembering that they did come in at the 87 level on September 15th for that currency pair. The dollar versus Canada is showing some signs of life here after selling off for the last few days. The market has moved back above the 100 and 200 bar moving average here, is represented by the blue line and the green line. We're looking at the 5-minute chart here. Notice how the market broke through those levels at this day right here. Use the level as resistance, use the level as resistance, try to use the level as resistance here. Move to the new low off of the employment number here today, and now rebounding sharply back above the 100 and 200 bar moving average. The next target would come in after I get rid of those other Fibonacci lines. The next target comes at 38.2% retracement at 101.75, 76. That's assuming that we get some momentum above this 200 bar moving average. If we can't get any momentum, it looks like it's maybe dying. We could see some further consolidation down here at the bottom, maybe new lows for that currency pair. But 101.76 is going to be the next target level on the top side. That also corresponds with these lows, this low and these highs right around that area. So watch those levels in the dollar versus Canada. Off the hourly chart, you can see here how we broke through this trend line here and use a 100 to 200 bar moving average as resistance up there at the top side, just like we did in the off of the when we broke through these levels. We use that 100 and 200 bar moving average as well for the dollar versus Canada. The Aussie versus US dollar is bumping against some resistance up here against a parallel trend line off the bottom here. That level comes in around the 97.57 level. Let's keep an eye on that. But regardless, this currency pair remains supported by higher interest rates compared to the rest of the world. Finally, gold broke to the upside, breaking above an upper side channel trend line here, going all the way back. This has been a nice move to the upside here for gold. Broke above that level at the 1327 level yesterday, moved up to somewhere around 1350 or so here today, coming off a little bit, currently trading at 1343. This downside trend line comes in at 1330 here currently. At the moment, we break through that level, and we could see some further liquidation in that the gold's going up, euro goes up is been the play of late, and we'll see if that relationship remains. So there you have it, a quick look at a lot of different currency pairs and gold included. This is Greg McCloskey with a Forex commentary for Forex Street.